There is a ton of misinformation out there when it comes to getting a mortgage after you've had a forbearance. A lot of people thinking you can't get one at all, others thinking you can get one right away with no issue. There's a lot of different options and opportunities that you do have, even if you've gone through a forbearance. So I wanted to point out an interview that I did a couple weeks back on the Talk of Connecticut Mortgage Matters radio show, and pulled out some clips here that I thought would be of value about getting a mortgage after forbearance. Okay, so mortgage forbearance is when your mortgage servicer or your current lender allows you to either pay your mortgage temporarily with a lower payment, or, as in most cases, pause paying your mortgage altogether for a certain period of time. Now, you do have to pay the money back. This isn't like a complete free-for-all here, as we'll talk about. Right when the forbearance ends, you make a lump sum and pay back all the money that you owe.
Ouch.
When you sell the house, they'll add that money to the back end of the mortgage, or when you refinance.
All right, there's more of a talk of forbearance now than, let's just say, in the last few years. Why is that?
It's always been around, but it wasn't being used by the masses until COVID hit. You know, when COVID hit, the government passed this act called the CARES Act. It included a lot of different things to help individuals and businesses get through the pandemic. It included like assistance to businesses, small business loans to stay afloat. But one of the things in there was to help consumers and homeowners, which was this forbearance plan. The CARES Act forced their hand to allow pretty much anybody, just by clicking a button online or calling in. One client in particular down in Stamford, the guy makes $250,000 a year, very stable job, wasn't affected by the pandemic at all, owns a couple properties. He put all of them in forbearance. He's just been pocketing the money. He's actually been doing some day trading with his mortgage money and buying Bitcoin and other things and investing the money he was going to pay towards his mortgage just because they gave him this free-for-all. He actually came to me to refinance and couldn't refinance because you can't refinance when you're in a forbearance. He had no idea, and that's the big thing is they make it so easy. Nobody has any idea about the implications of it. So a lot of people that didn't need to, like him, some of them, you know, multiple six-figure incomes, and they still took the forbearance plan because the way that it was shown to the public in the media was, hey, you don't have to make your payment. Do you want to make your mortgage payment or not? And of course, everyone was like, no, I don't want to make my mortgage payment. They click a button, press a couple keys on their phone, and then their mortgage is in forbearance. But then they want to go and see their home value going up. They want to refinance or they want to buy a home. And then the truth comes to the surface, which is this is a bit more complicated than just saying I don't want to make my mortgage payment.
What does that do to the bank?
Now, they're not only factoring in that you have a low credit score, lower income, higher debt to income possibly, but now it's you're a risk for forbearance as well. And the bank is obviously going to lose money in the short term because they're having to make payments to investors regardless. But now since the CARES Act came in and these forbearance plans are in, they're not getting the money from the borrowers, so it's driving the cost up for the lower end consumer. The people that need this the most are the ones that are actually paying more now. I just hope and pray that over the long haul, it will revert back because so many people really took advantage that didn't need it.
What happens to the money that is owed to the lender after a forbearance is completed?
So there's really three different things that can occur at the end of the forbearance. The first one is going to be you didn't really need the money from the standpoint that you did it as a backstop for your budget and you've got money saved. You missed 3-4 mortgage payments on forbearance plan and now you catch those up. You make a one-time lump sum payment to the lender. Now you're caught up. Now you're back to normal. Option number 2 is that they're going to modify your loan. They're going to do what's called a loan modification at the end of the forbearance. Adding it to the back end of the loan is the most common, and people can pay that money back when they sell their house or when they refinance. We'll just pay it back in a lump sum.
But there's got to be other hidden pitfalls.
There's huge pitfalls, and I think the biggest mistake that was made in this CARES Act is they were shown no consequence. So the number one biggest consequence that people don't understand when they do a forbearance is that there is a waiting period after you get out of the forbearance.
And that's where I was thinking of next. How does this affect your credit score?
And I would say 90 to 95% of the time, people that I have that I look at credit that were in forbearance or are in forbearance, it's not affecting your credit. The only thing is there's a notation on your loan that says that you are in forbearance. The second pitfall is that all the missed payments have to be paid back when you're either selling or refinancing. So again, it's not a free ride. And you'd be surprised how many people were thinking and were taught that it was a free ride, that the government was subsidizing the payments and they were getting paid, and it's just you don't pay and there's no repercussion. Hope you found value and some great information about the forbearance and getting a mortgage after having a forbearance. I know it can be discouraging, especially if you've been denied from another lender or had an issue getting a mortgage because of your forbearance. But I had a client come to me just a couple of months back who was working with a lender that didn't understand it, and they actually got denied for their refinance. But then after they came to me, they found some of my content online and reached out to me. We were able to structure the loan and present it to the underwriter in a way that we were able to get it done for them, and now they're actually on their way to closing. So if I can be of assistance to you or anyone that you know, feel free to reach out to me. You can call, text, or direct message me, and I'll do whatever I can to help. Again, hope you found value today, and we'll talk to you soon.